Don't make this mistake with the new $6,000 senior deduction. If you're 65 or older, this new deduction could impact your return, but here's the problem. A lot of seniors hear the number $6,000 and instantly think a check is coming, like a bonus, almost like a stimulus payment or a Social Security bonus. That's an easy mistake to make, and it's a costly one. This isn't a payment, it's a tax deduction, and how it works is completely different. That confusion doesn't come out of nowhere. Picture a retired couple sitting down with their tax documents in early spring. They've heard about this new deduction from a neighbor, a news segment, or a social media post, but nobody explained exactly how it works. That confusion is common, and it's exactly what we're going to clear up today. This video isn't here to create false excitement. It's here to clarify precisely what this deduction entails, who it benefits, and what to verify before filing your taxes. If you're over 65, married to someone over 65, or helping a parent with their taxes, this is worth a few minutes of your attention. To truly grasp why this matters, let's explore 3 common scenarios where seniors misunderstand this deduction, and why those misunderstandings can be so costly. Situation 1. I thought a $6,000 check was coming. Picture a 68-year-old who sees a headline about a new $6,000 senior deduction. He checks his bank account for the next few weeks, expecting a direct deposit. It never comes. Not because anything went wrong, but because this was never a payment to begin with. A deduction works differently. It lowers the income the IRS taxes you on. It does not arrive as cash in your account. Misunderstanding this distinction can cause disappointment and erode trust when no payment appears. If you rely on Social Security, Medicare, or a fixed income, make sure you're subscribed to James USA Guide. We help you cut through the confusion and avoid costly assumptions on your tax return. Situation 2, I get Social Security, so I assumed it happens automatically. Now picture a 70-year-old who receives Social Security and assumes this deduction applies to her without any extra step. But this isn't something Social Security applies for you. It works through your federal tax return. If you don't file, or if you're not aware of how it applies to your specific income, you may not benefit from it at all. Receiving Social Security does not automatically connect to this deduction. Filing your taxes correctly does. Situation 3. We are married, so we assumed we'd get the full $12,000. Think about a retired couple, both over 65, who hear that married couples may qualify for up to $12,000. They assume this applies to them completely, but depending on their combined income, this deduction may be reduced through what's called a phase-out, or in some cases, it may not apply at the full amount at all. Being married and both over 65 is a good starting point, but it does not guarantee the full number. Notice what these 3 situations have in common. In each case, nothing went wrong because of a scam or a mistake by the IRS. The confusion came from a reasonable assumption formed before checking the actual rule. This isn't just semantics. It's crucial. A deduction won't deposit cash into your account. Instead, it subtly reduces your taxable income, potentially saving you hundreds or even thousands on what you owe, or boosting your refund. Ignoring this difference can cost you dearly. Tax season is already stressful. Adding a confusing new deduction with a big dollar figure can make it even worse, leading you to overlook critical details that impact your financial reality. Don't let a headline cost you actual savings. Here's something important to know. Not everyone will receive the full deduction, and not everyone will qualify at all depending on income. But every senior over 65 or married to someone over 65 benefits from understanding exactly how this works before sitting down with their tax forms or with a tax professional. Now let's move past the confusion and dive into the facts. Exactly what this deduction is, how the numbers work for you, and your essential checklist before you file. Point 1. This is a tax deduction, not a payment. Forget the idea of a check. It works by lowering your taxable income. It does not arrive as a direct deposit, and it is not sent to you separately from your tax return. Depending on your overall tax situation, it may reduce what you owe, or it may affect your refund. Its precise impact varies for each individual, depending on their complete financial situation, beyond just this single figure. Point 2, the amount can be up to $6,000 per eligible person. If you're single and you qualify, the deduction can be up to $6,000. If you're married filing jointly and both spouses qualify, it can be up to $12,000 combined. Crucially, pay attention to up to. This is a maximum amount, not a guaranteed figure for every single person. Your actual amount depends on your income and your specific tax situation. Point 3, age and tax year matter. To qualify, you generally need to be 65 or older by the end of the tax year. This deduction applies for tax years 2025 through 2028. If you're approaching 65 later this year, it's worth checking exactly how the age requirement applies to your specific filing. Point 4, income limits apply. This deduction is not unlimited for every income level. For single filers, the deduction may begin phasing out. Once modified, adjusted gross income goes above $75,000. For married couples filing jointly, that threshold is generally $150,000. As income rises above these levels, the deduction may shrink, and at higher income levels, it may disappear completely. This is exactly why two people can hear $6,000 and end up with two very different results. Don't skip this point if your household income has grown in recent years, even slightly. Now that's where many seniors are surprised. Point 5, check before you file. This is not something Social Security applies for you automatically. It works through your federal tax return, which means the right place to confirm your eligibility is IRS guidance, tax preparation software, or a qualified tax professional, not your Social Security account. If you receive Social Security alongside a pension, retirement withdrawals, or part-time income, your complete financial picture determines your eligibility, far more than any single income source. This matters no matter your income because guessing is never the same as checking. These 5 points are your roadmap. The $6,000 deduction is real and valuable, but only if you understand the nuances. Remember, deduction, not payment. Up to, not guaranteed. Income limits are crucial. And always verify your unique situation before filing. This knowledge is your best defense against confusion. Your simple filing checklist. Check whether you will be 65 or older by the end of the tax year. Check whether you are filing as single or married filing jointly. Check your modified adjusted gross income, since that number determines whether the deduction applies in full, partially, or not at all. Check whether you typically use the standard deduction or itemize your return. Before you file, confirm all of this through IRS guidance, tax preparation software, or a qualified tax professional. Tip: print or save this checklist so you have it on hand when you sit down to file. 2, summarize the full picture. This new senior deduction is a real opportunity to lower what many over 65 owe, but always remember, it's a deduction, not a direct payment. It's not automatic, and it's not the same for everyone. The critical words are deduction and up to, and your most important action is always checking your own numbers rather than assuming. This video is for educational purposes only. It is not personal tax, financial, or legal advice. For your own situation, review IRS guidance or speak with a qualified tax professional. If you're over 60 and rely on Social Security, Medicare, or a fixed income, subscribe to James' USA Guide for clear, timely updates that protect your money and clarify your benefits. Please share this video with any senior filing taxes this year. Empower them to verify this information proactively